Inflation has been a big concern for a lot of investors, particularly recently. You know, it's been something that we haven't had to worry about for the past 40 years or so. We've managed to maintain it around the 2% mark, and that is perfect. But there are a range of investors like Ray Dalio, Charlie Munger, and Michael Burry who are warning that inflation may be on the horizon. Munger cautioned, in the end, if you print too much money, you end up with something like Venezuela, a country torn apart from inflation. Michael Burry's debt history is not useless. This text implores that the 1970s American inflation, which is more relevant today, Dalio said, now that the economy is rebounding, inflation pressures are rebounding. So you've got not just these investors, but well-known investors from around the world, warning of inflation. We've also got a bunch of statistics that points towards inflation being a problem in perhaps the not so distant future. I'll show you these stones, but the most important thing that we're going to discuss is how you can actually profit from inflation. Because I'll tell you, a lot of people are going to get wiped out from what is to come. You need to know how to prepare. So let's take a look at some of these warning signals that we're seeing first. This is something that not enough people are talking about, is the consequences of all these printing of money. So we had the pandemic and we had a lot of people who needed money. The government did what they pretty much had to do, and they backed in the trucks and shipped off a bunch of free money to them. They gave trillions of dollars to businesses that were struggling with loans, struggling with emergencies, and have a general need for cash. They spent hundreds of billions of dollars with tax relief given to individuals who were working hundreds of $billions more than medicine, and the same again for government needs. But this money had to come from somewhere. And basically what happened was money grew on trees and the Federal Reserve printed. It was created out of nothing. And all of our problems were magically solved if only that were the case. And if only printing money had no consequences, anyone who understands sound economic principles will know that this isn't the case. One of the major problems that come with printing trillions of dollars is inflation. Because if you start handing out free money to people, demanding for goods increases. They have more money to spend. And when demand increases, what happens to prices? They rise, as Charlie Munger says. If you keep this going, you're going to end up like Venezuela, which suffered from hyperinflation. But this is just one of the ingredients that is causing warning signals of inflation. Is that the aging world population? As we can see, back in the 1970s, we had a lot more young people relative to the retirees in the USA in the 70s. There were more than double young people compared to retirees today. It's almost the same for each category. UK, similar story, and the same. They were more young compared to retirees today. It switched to the opposite way. Round war retirees, then young. If you keep going throughout the developed economic countries, they tell a similar story. All of these strong economies are declining when it comes to the amount of the working age population. China, instead of growing, slightly declining in developed countries, it's the same. Eastern Europe, same story. The only one that isn't saying this is Africa, which is one of the poorest continents. Nowadays, coin is important because if you have less able bodies working less supply, it means the amount you can produce is less. And that means the price for labor goes up now. And businesses who hire the labor, they transfer this cost onto the country. AKA, they increase the prices of goods and services, AKA inflation. Now, these are just some of the factors that we need to be aware of, which could lead to higher inflation in the future. But the real question is, how can we make the money from inflationary times, or at the very least not lose money, because most of us haven't experienced high levels of inflation before. The last time that we saw high inflation was in the 80s, and most don't know how to invest during these times. We're not used to seeing our dollar become worth less, and bonds getting destroyed, and shares and stocks getting destroyed, and other asset classes getting eaten by inflation. You need to know what asset classes do. Well, Jaron is inflation and now one of the best options to go with. What I'm doing is buying real estate, and to buy this real estate, I'm getting in a lot of debt, about $750,000 worth. So let me show you the math behind this. So the worst asset class to be in during an inflation environment is cash, because obviously your dollar is becoming worth less and less. Now what's the opposite of cash? Debt. So instead of inflation eating away at your cash, it eats away at your desk. That's one positive of the real estate. But then, also with inflation, what happens to the price of your house? As inflation rises, the prices of everything, including houses, that's another positive for real estate, but also your rental income increases with inflation. So that's another positive. So if you get into real estate, your debt gets even then to make it less of a burden. But so, the value of your house rises, and 3, the rental payments increased. So with these investments, you're profiting in multiple different ways. And if you do this wisely, you can potentially make a lot of money from it. You can either buy real estate, obviously directly, or if you don't have the money for that by a rate, a real estate investment that will invest in real estate for you. And you can get into these at much lower prices. A real estate is not the only asset, which you can profit from inflationary times and other assets that tend to do well. Here is gold. Now let me explain this. So during an inflationary periods, investors say their cash drop in value. And so, no one wants to hold cash. And I think what's an asset class that holds its value, that has limited supply and cannot be watered down in value? And of course, gold is one of the answers. So when investors start seeing inflation, they flock to gold and it shoots up in a price. And if you look at history, it will show you. The last period of high inflation was in 1970 to 1980. It was very high, here between 5 and almost 15%. And what happens to the price of gold during this time? It shoots up like a rocket. It went up from $250 to over $2,000. This is why gold is such a strong asset to own during high inflation periods. But you want to buy it when it's still cheap. And yes, I myself, I am an owner in gold. Now, the other thing that is likely that investors are going to run soon if inflation goes high is cryptocurrencies like Bitcoin. And I know a lot of people are against burst, and I know it doesn't have the test of history to prove it because Bitcoin has only been around for 10-ish years, but we do have the logic. Let me explain. So with inflation, the crux of what's happening is your dollar is getting devalued. We've mentioned that. It's printed and printed about the watered down to become less effective. Now with Bitcoin, you can't water it down because that's the only set amount of the system. It has a limited supply of 21 million. So your dollar is getting devalued and watered down. So people start rushing to other forms of currency, one of them being Bitcoin. Now this is no guarantee. We don't have history to prove, but I think there's a big chance of Bitcoin taking off if we hit hyperinflation. So we've got real estate, we've got gold, we've got Bitcoin. These assets are ones that will do well in inflationary environments. The other thing that you need to be aware of is the stocks they perform here, and the ones that don't. Now it's a show for you. We're going to go to the example of the greatest investor of all time, Warren Buffett. He's talked a lot about stocks and inflation in the past. Essentially, when it comes to high inflationary times, you need to focus on stocks that have 3 key things you might want to write about. So one is the ability to generate rather than to consume cash. 2, as companies that can increase prices easily along with inflation. And 3 is to buy companies that have the ability to accommodate large dollar volume increases in. With only minor additional investments of capital, even a stock like Coca-Cola, Buffett's long-term investment should be better than most. In inflationary times, they can rise their prices as inflation increases. And there are companies that generate a lot of cash flow or stock like Sanderson Farm. They can easily raise the price of chicken along with inflation, and they can keep generating high amounts of cash. So it's these types of stocks you'd want to favor more if we ask to see high inflation in the future. So don't get me wrong, When inflation is high, it can be an absolutely wretched time when it comes to your finances. As Thomas Sowell said, hyperinflation can take virtually your entire life savings without the government having to bother raising the official tax rates at all. But it doesn't have to be this way. If you invest smartly, inflation does not have to take away your money. In fact, with wise investments in the right type of stocks, in gold, in real estate, and maybe in Bitcoin, you can profit while most lose.